Now, South Africans have been urged to tighten their belts after the Reserve Bank hiked interest rates by 50 basis points this week. And while there is an increased demand for credit, experts warn that finances must be managed within budget. Our business reporter, Ntokozo Khumalo, takes a look.
SARB Governor Khumalo came in defense of the Monetary Policy Committee's decision to raise interest rates by 50 basis points when asked about the impact of the hike on the vulnerable.
The vulnerable must eat too, and the vulnerable must spend money on goods and services too. And the problem is, inflation is eating their income. And if no one does anything about inflation eating their income, they are going to be in an even worse position.
Most South Africans are already in a slightly worse position, with the repayments that have to be made on their homes and cars. The home bond of 500,000 will now be over 5,249 rand towards the bond repayments from 5,000 rand in November. On the higher end, a home worth 3.2 million rand will now have a monthly repayment of 33,576 rand from 31,900 3 months ago. Car finance is not any better. A 500,000 rand vehicle will now have a monthly repayment of about 4,822 rand, paying close to 200 more from 3 months ago, while a car worth around 1.5 million rand has moved from an installment of 28,200 rand to over 28,835 rand. Analysts expects these pressures to continue for some time.
The SARB has raised their forecast for inflation, so they're anticipating inflation to stay higher for longer. That's not good news. So there's almost a double negative in there. Not only are you going to have to pay higher interest rates on your debt, but you're also going to have to pay higher prices for everything else.
And it's already evident that consumers paying more on everything is putting a strain on households. 8020's Consumer Credit Report for the fourth quarter of 2020 shows that the current balance on all loans is up 3.8% quarter on quarter at 2.28 trillion rand, with increases across all loan products, including retail and unsecured loans. In the same token, the number of loans in arrears rove around the 30% mark. Indwe Risk Services CEO Peter Olliott says while it's difficult for South Africans to find any way to pull back with the assistance of a financial planner, they can find ways to navigate the tough times.
The first one is to have a detailed budget so that one can detail the expenditure that we incur every month, and to try and separate the budget into the needs. That's the stuff that we have to have. Like you mentioned, the groceries and the car and house, and then the wants. And the wants are generally our little luxuries that we do have, if we still have them.
Olliott says that consumers should expect to get creative with their finances for a while.
Unfortunately, I don't have a crystal ball, so I can't expand upon. Most specialists are talking about the end of 2024 or maybe beginning of 2025. Where it will start to stabilize. That doesn't mean interest rates will go down necessarily, but they shouldn't be rising beyond that.
While most economists and analysts expected the central bank to hike rates by 25 basis points and signal that the hiking cycle was over, some economists now expect more hikes to come due to the SARB's hawkish stance. For Newzroom Afrika on Channel 405, I'm Ntokozo Khumalo in Johannesburg.